Thursday, August 1st, 1:25 p.m. New York time. Welcome to Winning Wall Street's Money. Yesterday, we just ended the month of July. That means we ended the first month of the third quarter of the year. Yep. Already halfway past the year. And since we ended the monthly time frame, I'll show you a part of my charting I apply. Look at the higher time frame of the major financial instruments, the top financial instruments. So this is the S&P 500 futures, 3 grids. The right grid is the monthly, the middle is the weekly, and the left is the daily. Here on the right, I'll open the grid up. And you can do the same with any financial instrument. I'm just showing you the top major financial instruments that are in my watch list to trade the most often. Here, on that monthly, last month, we made the all-time high. We closed with a small body in the middle, potential getting a retest on the upside. This new candle represents a new month, but only has one trading day. That big body, impulse move up, I labeled midpoint. Look at that. Last month, we came down and tested it, and we didn't close below it nor take it out. So that momentum, that trend is still up. Bullish bias, S&P 500. It's in the next trend. That's one trend, consolidation, next trend. On the weekly, still inside candle. Yep, it's Thursday, and we still haven't taken out the higher low of last week yet. The momentum is still to the downside. We have not done a 0.618 retracement yet. So still having more of a bullish bias to the upside. I'll show you that that green candle, that midpoint. I also have that labeled on the faster time frames you see down here. Now looking at the daily, 2-day red candle, higher high, higher low, big body. I shared this a few days ago to my Patreon members that we had this consolidation, and I was expecting an upward move to retest the midpoint. This horizontal line, this was a red candle, impulse move down. It was on a line, expecting we were going to test it. And if we break above it, we'll likely test this top of this impulse move down. And then we'll get some kind of reversal and maybe continue that H pattern down. That's how it's playing out so far. Very nice. What I'm now looking for, zoom in here, to see how this candle closes for the week. After 5 p.m. Friday, this would be done. Looking to see if we're going to stay as a yellow candle, or if we're going to break out above or below that prior candle to know what that trend is for the weekly and help determine the next setup. You could do this again with the other indexes, NASDAQ 100, Dow, Russell. This is the most important one, the S&P 500. Go on to the next. We did 10-year yield. Most common of all the yields. Again, yields have a correlation with the interest rates. Yields trade inverse the bonds and the notes. Yesterday, the Federal Reserve met. It left interest rates unchanged. So the 10-year, that red candle last month, big red candle. And currently, for the first day of the month, we're already trading below. I've been in trades bullish the bonds and notes, which is inverse to the yields. That's my swing positions, or actually a little longer term positions. Yep, so I'm doing well. using the underlying TLT. Look at here on the weekly, big red candle, broke below the low of this low, took out that swing low, and broke below that wedge. Nice. In the daily chart, momentum has been continuing going low. All signs are bearish bias. Now I need to be cautious and not give away my gains and consider maybe closing some of them if we get a bounce, get a reversal. So I'll be watching again how this closes for the week, as well as here. Determine either close the positions, or then we just had so much energy to go down. One would expect some kind of retracement. Let's go on to the next financial instrument. The dollar. I'm bearish buys the dollar. Last month, big red candle. Maybe we'll get a retest at midpoint. Weekly, as expected. We had that breakdown there, that green candle broke below. Excuse me. I apologize. We broke below demand zone. Here, that green candle, rejected, went back up multiple times. Tested at midpoint, that red horizontal line of that impulse move down. And look at this current week. What a whipsaw. Big wick on the top, big wick on the bottom, small body. Yeah. So I'm still bearish bias. And here on the daily, see how it's done the past few days. That was the impulse move down there, that red candle. And every time we went above it, that purple horizontal line, look at that, huge wicks. Sellers up there, not new buyers, selling in strength. Momentum continued down with more sellers to do this inside candle, midpoint, we tested it. So I have some buyers there. Overall, it's bearish. And I'm using the inverse UDN, stock ETF, trading bearish. You could do this on other currencies too. I'm using the US dollar index. We're going to commodities now, the major commodities. Energy, crude oil. You could do all natural gas and other ones, but again, I'm just throwing the top. So crude oil. Look, we're below the high of last year, above the low of last year. Huge consolidation. Very tight trading range this year. Not much volatility as the past years. Red candle went up, partial retest of this big wick and filled. We are making higher lows. Showing me more bullish buys there. Building a wedge. Just like here. And that's what you see there, the wedge, the white lines. We have a situation in the Atlantic Ocean. It's hurricane season. Another reason to be looking for buying on the dips crude oil. If it turns into hurricanes or severe storms, they go to the Gulf of Mexico. For safety, they shut down those oil rigs. Those oil rigs stop production. The world still needs oil for jet fuel, for bulk carrier ships, trucks, cars, trains, infrastructure, power plants. Still need oil. Just shutting down those oil rigs in the ocean puts more demand at other locations, Canada, South America, Africa, Asia. Yeah. That means you have currencies being sent abroad to buy imports. So here on the weekly, that big red candle, big shadow on the top and bottom, looking for a potential reversal here. And here on the weekly, on the daily, that went down, the impulse moved down. Small little body went down there, very weak, very weak. The bears lost control there, and we had a reversal. Bulls took control. And then look at that big green candle up there. And currently for the day, we went down, tested it right there. So I'm seeing opportunities for more bullish bias. Let's go on to another commodity. Metals, gold. All-time new high right here on the monthly. I labeled the midpoint of the prior green candle. Huge green candle for the month of July. Used a lot of energy up there. I'm expecting a pullback. So I took this midpoint here, labeled it, and also did it on my lower time frames, weekly, daily, intraday. Looking here on the weekly, look at the candle. We just made it all-time high this week, right there. Huge. Went down, broke above this supply zone. And today, look on the daily. Finally, again, like I said, all-time new high. Outstanding. Huge momentum up. And it's already closing red. Not surprised. You have a divergency. Hit a high here, higher high there. You see that here too on the prior weeklies. One would expect some kind of pullback. And if you're bullish, looking for the opportunity to reload on the pullbacks. Let's take it to the final asset, crypto Bitcoin. Monthly, that green candle, huge wick on the top, huge wick on the bottom. The value is inside these tight trading ranges. A lot of rejection up on the top, lower highs. See how the green candle went? Lower highs. But the green candle last month did close above the close of that prior month. So there's a lot of value building in this area. For the week, as expected, tested that midpoint. Tested impulse move down, which is the supply zone of sellers. So Bitcoin ran up there this week, rejected it, and down big red for the week. Again, this will be done at close on Friday. You can see here on the daily, you had a consolidation there, broke above it, rejected it. Bunch of sellers were there, and momentum's to the downside. Well, that's it for the video. Thank you for taking the time to watch it.